Welcome to Access a Trader, the #1 community for high-level traders to learn valuable trends and strategies, connect with other top traders, and become consistently profitable. Click the link in the description of this video to receive a special offer on our revolutionary PS60 training, access to our daily interactive webinar filled with experienced traders, and so much more. Space is limited, so make sure you don't miss out.
Hey guys, good morning everybody. Welcome to another edition of the AccessATrader.com nightly wrap-up show. Hope everybody is doing okay. Happy early 4th of July, well I guess weekend, 4th of July weekend. Anyway, short week coming up, a lot of people are on vacation. You can already see by live webinar, literally every day I get a text message. I'm going to Mexico, I'm going to this one, this one. So a lot of people are going to be off this week, and a lot of people, well, again, you need time from this trading thing, and we always discuss this. You always need time from this trading thing to kind of decompress, to enjoy life. Again, enjoy life. You don't need to sit there constantly behind the screen trying to squeeze water out of a rock. A lot of times you just need to be a better friend to yourself, right? It's all about me, right? Just say it with me. It's all about me. Be a better friend to yourself. Take a vacation. Take your family to the beach, just have a staycation, stay at home, just give yourself time to kind of decompress, get your mind right, and you can come back and play a premium hand. And before everybody celebrates the 4th of July holiday, let's celebrate technical analysis, right guys? Everybody, especially with the whole new social media phenomenon, and again, majority of new traders probably get majority of their information from social media, and I've been saying this for years and years and years, that I would say there's just so much noise and just so much just kind of stuff that if you've been trading for a long time before the whole internet thing started, if you've been trading for a long time, you kind of look at a lot of the things that you see on social media. You really got to scratch your head. Are they trading exactly the same market as you? And I really do believe there is a gift and a curse. I've said this numerous times, but a lot of the information that you do get via social media is just so off the wall, so out there on a different planet, that I do believe that a lot of aspiring traders, unfortunately, are really suffering from a back test in their development, just from a lot of stuff that you do see. But the one thing that you cannot take away, okay, the one thing that you cannot take away and kind of brush it aside is technical analysis, and we celebrate technical analysis every single day. Now, again, does the PS60 theory play perfectly into that? Sure, but technical analysis, guys, especially if you're new traders, is the purest form, right? It's the purest form of a lifeline that you have. And we say this all the time, that charts don't lie. Sometimes they don't tell you the truth, but they don't lie. And overall, the market is going to be right. The casino is always going to be right. So you might win once or twice against the casino, but when it all comes down to it, if you don't have a process, right? If you don't have a process, you die. And again, case in point, I tweeted it out yesterday. 2017 was probably one of the most aggressive markets, right? Linear markets that we had. Just a phenomenal run. If you believe that Trump had a lot to do with it, that's great. If you believe that Trump didn't have anything to do with it, that's great too. Most important part is the facts of the facts. 2017 was one of the strongest linear moves we saw in recent history, in a very, very long time. And the point that I'm trying to make, I tweeted it yesterday, 784 hedge funds, or 787 hedge funds. I think you could go on my Twitter page and see it. I think it was right around here. I tweeted this out yesterday in the afternoon. I saw it kind of, here it is right here. So 784 hedge funds closed their doors in 2017. And this is the article. If you click on my Twitter page, you'll see the Bloomberg article. And this was part of the biggest runs, one of the biggest runs that we've seen in a very, very long time, right? An incredible, incredible big run. And it basically says that, the theory behind this whole thing was that it doesn't make a difference how much money you could raise. It doesn't make a difference what your title is. It doesn't make a difference if you're a hedge fund manager, mutual fund manager, index fund manager, you run a quant model, whatever the case may be. If you don't have a process and trust technical analysis, you die. And 787 hedge funds from last year would agree that that data is absolutely correct. So at the end of the day, guys, it's all about technical analysis. It's all about education. It's all about longevity. And if you don't connect the dots on all the cases that we just mentioned, you die. You're a dinosaur. You are a living corpse. So let's talk about technical analysis. Let's talk about the week, and let's see what we exactly have coming up. So we talked about this about a month ago, right, guys? Again, technical analysis. It started out so innocently, okay? It always does. It starts out so innocently, and you get that first close below the 5-day moving average. And we talk about that 5-day in nausea, especially in the last month or so, because we've seen it play out. Again, for those of you guys who are joining us the first time via our YouTube network, StockTwits, or even Twitter, new followers on Twitter, the 5-day moving average is the least appreciated, right? The least appreciated scenario that you can have that people take any stock in. And it's probably, for me, one of the most important, because the 5-day represents short-term strength or weakness. And once the Dow Jones Industrial lost that 5-day, it really started a chain of events that really started getting aggressive. And you saw, if you watch the weekend update every single week, especially members of our YouTube family or StockTwits family or even Twitter, you constantly see us going, just kind of back testing results and back testing data and accumulating this data to make an accurate opinion of what's going to happen next. And we kept on seeing a 5-day close traded to the 10, the 10-day close traded to the 20, the 50-day close traded to the 200-day moving average. And I said, nausea, any close below the 200-day moving average, right? The longer we build a base underneath the 200-day moving average, which is the mother of all supports, we're going to have a slow death. We're going to have a slow death, and if there's any catalyst, that death is going to be really going to be expedited. And you saw exactly how this reflected upon all the groups that were untouchable, all the groups that were just massive bids over and over every single day. And it really had a trickle-down effect in kind of where we are today. And when we saw over and over again different groups that led the market higher, especially the Russell, and we had a great trade on the Russell in the middle of the week. We had this awesome trade. We took this sneaky pivot here, we added here, and it just had a great trade. We actually still have a runner. I still have a runner on from that 84.50s area on the IWM. Again, I think we're going lower. We'll talk about it in a second. But you started to see a lot of information being gathered, and a lot of information supported the bear thesis. And again, I don't want to actually use the word bear. I think the word bull and bear, like 10 years ago, it's sell and buy bias. We had a lot of cases that were really backing our thesis. We had the 5-day on the Dow losing. We had the NASDAQ 100 slowly but surely, and we'll talk about the NASDAQ 100 right here with the proxy of the QQQs. You started seeing exactly the same thing play out. It had the same way the Dow lost the 5-day. Well, the NASDAQ lost the 5-day, then lost the 10-day, and so forth and so on. So we started seeing buyer strikes on the highest flyers. Then the IWM, who really let us up, really let us up, did exactly the same thing. Lost the 5, lost the 10. So for new traders, again, put that 5-day on your studies. Again, it's not going to be there every single day for a point of reference. But once you see it close above, that's bullish. Once you see it close below, that's a bearish, and you start adjusting your sentiment and your strategy because of that. But we started seeing a pullback in the IWM, and it really led to a great sell thesis. You saw the Dow stocks, right? Look at many companies are represented in the Dow that had exposure to China. You had this huge move on Boeing. You had this huge move on Caterpillar, right? These really bad moves. Deere, right? Deere, anything exposed to China. You had the semiconductors, right? The SMHs. Everything to do with China got sold. You saw these high-flying IPOs, the IQs, right? The IQs, big sell-off. The Huyas, right? The Huyas of the world, big sell-off. On and on and on. You can go through a whole list, and you started seeing all these points again being collected. And the one group that has been completely missing in action is the banks. And on Friday, it kind of echoed the statement why, again, I believe we're still going to have short-term selling pressure. You had the banks. The banks had an opportunity to rally, right? They absolutely did. If you look at Goldman Sachs, for the last, even going back to January, February, March, even going back to March, you would think we're in one of the worst bear markets, in recent history. they just cannot get out of their own way. So the thesis going into this week, you have a buyer strike in beta. Well, how do we know? The Dow dropped 2.5%. For the week, right? The Dow dropped 2.5% for the week. Amazon, again, holding on, but again, holding on. Netflix is holding on until until it won't. Facebook is nearing until it doesn't, right? Tesla shares had a big run, but now, again, it keeps on getting slammed into supply of 60-minute channels. We'll talk about that, obviously, tomorrow at Morning Strategy. So you have all these things building up. And again, the longer a stock or an ETF or an index, whatever the case may be, is stuck in a channel and it can't reclaim, that becomes a problem. You look at the SPYs, right? You look at the SPYs, look what happened. It held support, bounced, and look how it got rejected off the 10-day, right? Again, stocks go, believe me or not, but believe me, stocks go from supply to supply and demand to demand. So when you get a rejection the first time on the SPYs and we go lower, and we get a rejection the second time on the SPYs, and we reverse course and get lower, it's the same supply zone. So again, you're trying to form your thesis, you're trying to form your opinion, your bias into the next trading day based on facts, not what you want to believe, not your reality, but the actual reality. And based upon what we know going into a week that is going to be, number one, shortened, number two, a lot of people are on vacation, and number three, we're like right dead mid it feels like right dead mid in the summer trading, but that's kind of where we are. We only have like a month and a half left and the kids go back to school. So we are technically, even though we're only like 2 weeks officially after the start of summer, June 21st, it feels like we're in the middle of the summer. So we have a lot of negative notes in front of us. Now, is it going to play that way? Again, our job is not to be Miss Cleo. Okay, our job is not to be Miss Cleo. I'm not trying to forecast. I'm not trying to predict what's going to happen. We're taking the information we already have, and now we're waiting for confirming prices. So yes, do I feel there will be a sell bias going into this week? Absolutely. But if we open up lower, flush out, and we start confirming Friday's price action, I mean, literally Friday's price action through the highs, of course we're going to go higher. Again, I'm not a bear. I'm not a bull. I am an area. I believe I'm an opportunist, and that's all we're looking for. But again, you better have a process. You better have a bias, and then only when does it confirm that you act on that. That's why patience is a very, very loose term, but it's so necessary for your survival, not only for the short term, but the long term in longevity. So, pretty solid week. Again, pretty solid week for a lot of people who say that this was a choppy week. It was. The only difference between a normal choppy week and a person who trades beta, think about it. Beta, we have the highest ranges. We trade the most aggressive stocks, but we have the most control over these stocks. And obviously that's the case for the PS60 theory. It's a very, very specific action. But again, I get the whole chop factor. And if you do trade specifically only through daily charts, you probably did suffer the chop factor. We trade ranges. The bigger the range, obviously the biggest point of reference so we can have defined risk and obviously defined probability for success at the same time. Good solid week despite the indexes being down. S&P fell down 1.3%. The NASDAQ fell down 2.5%. Pretty steep move there. The question going into this week, is there going to be anybody there that's going to support prices going into this week with a lot of people on vacation, a lot of people out? So we'll see. Again, we'll see. As the old adage goes, we'll see, said the blind man. We'll see. Overall, I thought Friday was some good action. This is now 5 Fridays in a row, Fridays in a row that we are seeing pretty aggressive action, especially in beta land. Again, you don't need a lot to get to one of these things going. And if you believe in the theory that stocks trade from supply to supply, demand to demand, and once they get confirmed in the 60-minute interval, usually good things are going to happen. So Friday, let's just talk about some pivots from Friday. Again, guys, for all you guys who don't know, we do have a private Twitter feed. For all you guys who are just getting started in pivots, I try to primarily put higher beta names in there. So if you're an option player, I'm not an options guy, but if you are an options player and you trade beta, it's a really, really good starting point. It's only $20 a month. That's it. It's only $20 a month. We do have a package program for the live pivot feed, for the nightly video that goes out Monday through Thursday. through the option flow and all that good stuff in between. So we have that as well. But just to get started, if you do like pivots, this is the place to be. So again, we started putting this in pre-market. VRTX 162.21 and build is important. Well, why is it important? Because VRTX 62.21 was the pre-market high. Again, sometimes certain strategies are not, they're not supposed to be complex. They're really not. They're not supposed to be complex. Here was the high. Here was the high right here, pre-market high. You can see it at 8 o'clock in the morning, 62.21 on VRTX, and this was just an outstanding candle. Congratulations to all you guys who did catch that. It went from 62.21 just on one candle alone. Forget about the rest of the day, but it went from 62.21 all the way to 68 on one candle. $6, pretty aggressive. Then again, this is right, pre-market. It's not after the, it's not after the fact. It's all pre-market. Boeing 338 build important. Boeing again. Here's the 60-minute value on Boeing, right? Here's the 60-minute value. You can see 337.54, 337.50, 337.50, 338, right? So once it broke 338, look at the move. It went up to almost 40. Nice move there. Congratulations, you guys who caught that as well. Then this was a pretty aggressive trade. This was at 10 o'clock. Netflix watched the 395 build. If it can build under, it can flush. Now, why was Netflix 395 build important? Right here is here it is. Here's the opening candle into support. Right here's the opening candle into support, and the next candle once it got below it, right 339.40. Look at the move. It went all the way down to like 391. Big move there as well. So good job there. Let's see what else we had. And again, people talk about Tesla. There's two groups of Teslas. There's the guy or the gal who believe that Tesla will go to 10,000, and it might well, right? And there's another group that believes that Tesla is a fraud. Okay, and we'll go to zero. Okay, cool. For us, we just look at it at face value. Okay, there is no bias for me. Look, am I a champion of technology, innovation? I cheer for success. I don't cheer for failure. So do I want Tesla to succeed? Absolutely. For me, and a lot of people in the live webinar, this has been the greatest trading instrument, like pretty much ever. I mean, it really has been, and on both sides. And again, there is no bias. I trade this to the upside. I trade this to the downside. In the morning, pre-market, Tesla range today, 356 to the upside and a build below 348.50 to the downside. That's it. There is no bias. I don't care about the fires. I don't care about the production. I don't care about the new model. I don't care. I care about price action. I care about confirming candles, and all I care about is the cash flow in the stock, and I try to do it all day in this thing if it's possible. So if you look at Tesla. I mean, here it is. Here is the channel we talked about, right? Here's the channel we talked about. 356, right? 356 was the sneaky pivot. Again, you don't need the top of the channel to have an interval there. You can see here, right here, 356. 355.70, and this channel right here, 355.75. So again, we rounded off 356 build to the upside. And why was 348.50? Well, again, here's the lowest candle into support, right? 348.50. So 356 to the upside, 348 to the downside. And once it confirmed, right? Once it confirmed, right? You kind of get the point. So trading is all about collecting data. That's all it is. Anybody else who tells you about anything else when it comes to real stocks? I'm not talking about the garbage that people push up. There's some $3 stock that's up 900%. We got to buy it because it's going to go up 901%. Yeah, that's great. That's you. That's great. This is just not my thing. It's just not my thing. Having said that, I did trade two smaller cap stocks on Wednesday or Thursday. I made money in both of them. I don't know what I was thinking, but I did it, right? When in Rome, right? But again, sometimes you got to get things out of your system. But ultimately, guys, you should remember, trading is all about risk. If you're buying a stock, up 250%, your goal is to make a dime. Just take a step back and logically think about what you're doing, right? And if you're buying up a stock up 250%, and you're looking to make another 20% on it. Just think about logically. Stock has just gone ripped up about 250%, and on the downside, everybody loves to short stocks. Unfortunately, a lot of new traders, again, are getting so much bad information on social media that they're diving in on the front side of the move, which is again, the easiest way to blow out your account. It's the sexiest trade, but again, it's not the safest trade. And I always say this, no matter hell or high water, bull, bear, in different market. It's all about leading with your shield, not with your chin. Again, it's all about longevity, guys. And when you're buying a stock or shorting a stock, just because a stock is up 250% doesn't mean it can't go up 350%. And just because a stock is up 200% doesn't mean it can't go down 100% in the next candle. So again, really try to understand what you're trading. Again, if you don't believe that trading is all about risk, then you're doing it all wrong. It's just, there is no room for interpretation. It's all about risk, okay? Without risk, you die. You might make money once, you may make money twice, but you're not gonna make it. At the end of the day, you're not gonna make it. It's like trying to take money off of the casino. You might make money once playing blackjack twice, but I guarantee you at the end of the year, the casino is always gonna be right, and that's exactly what it is. The mother market is the casino, and if you're trading reckless with your money, look, a fool and his money, you know, they're saying. So pretty solid week. Monday is a full day. Tuesday is a full day. I believe, excuse me, I think Tuesday might even be a half day. Wednesday, we are off. Thursday, I'm only gonna be trading a half session, then I'm taking a 4-day weekend. Again, the market's gonna be completely dead after Thursday, Friday. Forget it's gonna be a ghost town. So hopefully we'll get a good value. So going into this week, just based on technicals, that's it, just based on technical analysis. NASDAQ 100, you can see that it's teetering on the bottom channel here, very, very close to breaking down. The IWM, again, these are 60-minute channels. You can see how close it is to breaking down. The diamonds as well, I mean, same thing. They reflect all on each other, and you can see it. All rejections, the same thing on the 10-day moving average. So again, the whole theory that I have is if you believe the 10-day moving average is the birth of the trade to the upside, well, kind of get my point. So that's that. So let me give you guys some ideas going into tomorrow's session. Okay, let me give you guys some ideas going into tomorrow's session. A lot of shorts out there, guys, and obviously for all the data that I am collecting is really representing on the short side. I'm going to give you guys a bunch of shorts. There are some longs that I like, but I don't want to share them publicly because a lot of them, I don't want them to turn into crowded trades. For the exception of Roku, I kind of like Roku. If the market holds up, I do like Roku here. Roku did close over the 5-day. Remember the whole 5-day conversation? Anything closes over the 5-day, also in bias becomes back to the long side. If you look at the 60-minute chart on Roku here, you can see here, if it can just get a nice base, okay? If it could get a nice base over 43, as you can see, 42.98. If Roku could get a nice base over 43, again, why can't it go to 43.65? Why can't it go to 43.89? Again, I'm not loving the long side, but just in case we do go higher, just in case you got to be prepared for both sides. So definitely keep an eye on Roku if it starts building above 43. I'll actually give you one more long setup that looks pretty good. Genworth Financial actually looks pretty good. You had this big gap up, and you had this straight line of selling. You had like 3 weeks of selling, and again, this is the first close over the 10-day birth of the trade, right? So again, if you believe that the birth of the trade is the 10-day moving average, well, here's your technical view. Keep an eye on it, especially if it washes out in the morning, goes kind of red to green. Any build over 452, 455, you could get a push right back. So keep an eye on Genworth. Slew of shorts that I do like. Look at JD again. The Chinese trade has not been good for the Alibabas of the world, the Baidus of the world. It stopped at the 50-day moving average. Set an alert. Any close below this 37.90 could start, a wave of selling. Keep an eye on JD. I also like ADI, ADI as well. Analog device, again, in the semiconductor exposure to China. Again, stopped at the 50-day. If that 50-day gets confirmed, we go lower. Avago, same thing. It closed 2 days below now, off the 50-day moving average. Again, all it needs to do is reclaim this 242 area, and stock should go lower. Facebook, Facebook's in trouble also. If we get a pullback, right? Look at this, guys. I mean, just 1, 2. This is the third candle in a row, right? The longer the distribution, the better the move. And it stopped now twice at that 193.11 area, right? 193.11, 193.26, loses 193. You could get the 89, 87 very, very quickly. It actually looks like the Adobe chart that we had a week ago, right? If you look at the Adobe chart, it's the same thing, right? You triple bottom right here, and once it broke, look what Adobe did. Right? It's not magic. It's technical analysis. So Facebook, you got it set up exactly the same way. For all your option players, again, I'm not an options guy, but again, supply to supply, demand to demand, you have room to like 89, 87, maybe even 86. So for all your option players, get your ducks in a row. Keep an eye on Facebook, and the video looks bad as well. I mean, the video looks bad as well. Same thing. The video at the bottom of this channel here is this 235 level. It loses 235. It goes lower. Tesla. Again, Tesla closed right at the 5, right? Again, what did we say 20 minutes ago? And he closed below, the 5, right? So we're watching that 242 breakdown for possible move to 237 as well. So again, going into this week, I am sell biased. Can that turn around by Monday mid-morning? Anything's possible, right? Anything's possible. I say this all the time, especially to the new trader. I can be wrong theoretically 100% of the time, and I'm fine with that. Okay, it's not about being right; it's about being profitable. But again, you could be wrong 100% of the time theoretically, as long as you're not wrong financially. That's the name of the game, guys. God bless. Enjoy the remainder of your Sunday. With God's help, I'll see you all on the field tomorrow. Take care, guys. Have a great Sunday.